A warmest welcome to Dr. Siti Fariha binti Muhammad. We are from Group 1 presenting our case study report.
For the introduction, the case study of Pinewood presents several accounting scenarios and challenges that need to be addressed. Here is the key findings and recommended action. Journal entries should be prepared to record the expenditure incurred subsequent to the acquisition of property, plant, equipment of Pinewood in 2020 and the new cost of the building, the new annual depreciation, journal entries for revaluation of building and disposal of the building. Next, capitalization of interest, impairment loss, and government grant received in 2020 should be recorded properly. For inventories, Ms. Shaifa should be educated on the required accounting treatment for inventories according to MFRS under 2. Other than that, the subsequent measurement model adopted by Pinewood to account for the pattern should be identified. Customer list and trademark. Last but not least, goodwill recognition and any impairment loss arising from the acquisition of characteristics along with the correct allocation of impairment loss.
The question given, we can make journal entries for repair expense, building, floor replacement. And the economic question, we must calculate that. So, firstly, we must calculate 5287047 plus 1750 plus RM 530,000 plus RM 150,000 minus 0 and divided 10, and then we multiply 3, and then we get 1,790,639 and 0.10, and then we must calculate new cost of building. So the first one is mass building cost plus addition plus floor upgrade expense minus accumulated depreciation. Question number 2. Calculate the annual depreciation for the building after the investment is made in 2020. So, as we know, original cost of building 5,287,057 and the residual value is RM0 and it's a full life 10 years. So, we must calculate for depreciation for 218 and 2020. Is cost minus residual value divided is a full life. So next one is we must find cost of building in 2020. So we must calculate that 5287047. We must minus from get that depreciation for 2018 and 2019. The next one is we must find new annual depreciation for 2020. Formula is cost minus residual value divided is a full life. Question number 3. Prepare journal entries to record the depreciation of the building at the end of 2022. So firstly, we must find accumulated depreciation, and the formula is depreciation value divided is a full life, and then we get RM 800,000. So next one is we must find building. So the formula is depreciation value minus new cost of building, and then we get 1,423,592.110, and next is revaluation surplus. So the formula is revaluation value minus CA, and then we get 2,223,592.10. Question number 4. Prepare the journal entries to record the disposal for part of the building at the end of 2023. So firstly, we must find accumulated depreciation, and the formula is cost of asset divided is a full life, and then we get 800,000. So next one, we must find cost of building. So this formula cost of asset minus accumulated depreciation, and then we get 4,800,000. And we must find disposal of building. So cost of building multiply with portion of disposal. We must multiply with 1/4, and then we get 1,200,000, and then we can make journal entries.
Before I present question number 5, I would like to introduce myself first. My name is Nubashira Alia binti Pemazmi and my matrix number is A22A0981. So for the question 5A, that is calculate the amount of interest to be capitalized in 2020 and prepare the related journal entries. Firstly, we have to calculate total weighted average accumulated expenditures and interest for the year 2020. After that, to find interest to be capitalized, we have to calculate avoidable interest first. The avoidable interest can be obtained by multiplying the total weighted average with the interest rate that we calculated earlier. So, after we get the amount of interest that needs to be capitalized for the year 2020, we can proceed to create a journal entries for Pinewood Company Berhad using the specific values that need to be journalized. Then, for the question 5B, which is calculate the amount of interest to be capitalized in the year 2021 and prepare the related journal entries. The calculation method is the same as in question 5A, which is we have to find the total weighted average accumulated expenditure, actual interest, avoidable interest, and interest that need to be capitalized. And after that, we can make a journal entry for the year 2021 based on the value that we have calculate. Next, for the question 6 studies, analyze whether the company should report an impairment loss of 100,000 ringgit. Pinewood Berhad should not declare the 100,000 ringgit is impairment loss because impairment loss occurs when assets carrying amount, which is CA, assets exceeds its recoverable amount, which is RA. Furthermore, a long-term tangible asset is impaired when a corporation is unable to recover the assets carrying amount through use or sale. After that, for question number 7, explain how the government grant received in year 2022 needs to be reported. To answer this question, firstly, unearned revenue is transferred to the income statement as income every year during the useful life of the asset. Every year, 400,000 ringgit will be sent to the income statement in this case. Then, the remaining balance in the unearned revenue account at the end of December 2022, that is 1,600,000 ringgit, which must be recognized as a liability on the balance sheet. This liability must be divided into two parts, which are non-current liabilities, which amount to 1,200,000 ringgit, and current liabilities, which are 400,000 ringgit.
Next, we continue with question number 8. Before that, I would like to introduce myself. My name is Sunishra with insurance. My metric number is 8228098. Question number 1. What is net realizable value? Net realizable value defined as expected selling price less projected finishing cost and estimated cost required to be complete the sale. Next is what are the reason value of the inventory less than the cost. First is damage of the product. Second is decision being made as part of Pinewood Berhad marketing strategy to manufacture and sell the product at a loss. Third is Pinewood Berhad made error in production or purchasing the inventories. Fourth is increasing cost of the inventory or falling in the selling price of the goods. And finally is a physical deterioration of inventory in the Pinewood Berhad production due to the changes in the technology and consumer preference. Now we continue with question number 9 and observe that for the question number 9, the subsequent measurement model under the Pinewood Berhad for the pattern is revaluation model at the fair value. Next, for the question number 10, this is the journal for the cost of the pattern, outside expenses, and also increase in market value of the pattern in 2021. For the amortization calculation, we calculate 10 million divided by 5 years, we can get 2 million. Next, for the increase in market value of the pattern, we calculate 10 million minus 6 million, we can get 4 million.
Hello, my name is Sharita and my metric number is 8228080. Question 11. Journal entry to record the cost of pattern, amortization expense, and increase in market value in 2020. The cost of pattern is 6 million, and the amortization expense, cost of the asset is divided by the number of years of economic life of the asset. So 2 million is divided by 3 years, which is the remaining useful life. So we will get 666,666 ringgit and 67 cents. To record the increase in market value of the pattern, 10 million minus 2 million. So we will get increase of 8 million. Question 12. Journal entries to record the cost of the customer list and amortization expense in 2020. A customer list was purchased at a cost of Rm 560,000 and it is forecasted that 40% of the estimated future benefits from the customer list will flow into the company in 2022. So to find amortization expense, Rm 560,000 times by 40% and 9012, which is the duration from April to December 2022, and we will get an amount of 168,000 ringgit. Question 30. Discuss whether the director's view about the amortization and impairment test of the trademark is in line with the requirement of MFRS 130 intangible assets or not. The director's perspective on amortization and impairment testing of the trademark does not align with the requirement outlined in MFRS 138 intangible assets. According to the accounting standard, intangible asset with indefinite useful life should not amortize the asset, but should be evaluated for impairment periodically. The director believes that the trademark should be subject to amortization and that an impairment test should only be conducted when the trademark is renewed. When there is no evidence or indication of the impairment at the end of the accounting year, no impairment test will be performed annually, or if there are signs of impairment for that time. The director's viewpoint of conducting impairment tests during the renewal process does not align with this requirement.
Hi, I'm Raja Prasad with metric number 82280503. So the next question is prepare journal entries necessary for the trademark in 2022 and discuss whether Pinewood should conduct an impairment test for the trademark on 31st December 2022. For the general part, debit will be trademark expenses and credit will be cash or bank 250,000 ringgit on June 2022. According to the information, amortization cannot be calculated based on a specific period because trademark is indefinite useful life and will be renewed every 10 years. According to Pinewood, there is also no evidence or indication of impairment at the end of accounting year. So there is no need to conduct an impairment test for the trademark on 31st December 2022.
Alright, on question 15, we need to determine the amount of goodwill recognized at the acquisition date of Jati Districts and the impairment loss to be recorded on 31st December 2022. First of all, we need to calculate the amount of goodwill. To calculate goodwill, we need to find a fair value of the net asset acquired, which is 900,000. Goodwill can be calculated by subtracting consideration transfer with fair value. Fair value of net asset is 900,000 and goodwill at the acquisition date is 200,000. As additional information, net asset on 31st December 2022 is 1 million and we can find the net identifiable asset, which is 500,000. From the previous calculation, now we can find the carrying amount of the asset and also impairment loss. For the carrying amount of the asset, we need to add goodwill, building, equipment and inventory. So the answer is 1.1 million. Now the carrying amount of the asset is higher than recoverable amount that given in information, which is 300,000. So there will be an impairment loss to 800,000. So the last question is about explanation of why the company senior accountant think that the accounting treatment suggested by the company POD, which is the impairment loss of Jati District division, should be allocated to the asset that has the highest carrying amount, which is not in accordance with the MFRS 136 impairment of asset. And also we need to determine the correct allocation of the impairment loss. So the overall principle of MFRS 136 is that the asset should not be carried above their recoverable amount. MFRS 136 also prescribes that an entity will determine the recoverable amount of cash generating unit, which is CGU, to which an asset belongs to. According to MFRS 136, which mandates that impairment losses be allocated to specific assets based on their carrying values. If the CGU's recoverable amount is less than the entire carrying amount of the asset, including goodwill, the impairment loss should be prorated to the lower carrying amounts of the individual asset. So this is the correct calculation of allocation for impairment loss by pro rata basis. Impairment loss is 900,000, amount to allocate against goodwill is 200,000, amount to allocate pro rata against other assets are 700,000. Goodwill will be allocated by fully. Building as 1/2 allocation over 700,000, equipment as 3/10 allocation, and inventory as 1/5 allocation. From the table, we can see the carrying amount for each asset after deducting the allocation of impairment loss. Carrying amount after impairment loss to the building is 150,000, equipment is 90,000 and inventory has 60,000. So total carrying amount after impairment loss is 300,000. In conclusion, Pinewood Berhad needs to address various accounting issues such as property, plant and equipment, inventories, intangible assets, and impairment assessments. By applying the relevant accounting standards according to MFRS and ensuring accurate and transparent financial reporting, the company can maintain its financial integrity, make informed business decisions, and comply with regulatory requirements.